Hey, welcome everyone. Tom here. I want to go over that horrible trade call that I made on the 31st of March. I really wish that my ears would listen to myself when I say something. It's totally crazy. If you go back to the beginning of the video, I said that I was expecting our market to break down to like 155, the figure 150, 154.90 level. And we needed to open above 156.08. So by me saying that and saying I'm going to try to front run this trade, basically buy before the breakout occurred, was a really foolish mistake. And it's basically because of impatience. And this is a really good lesson for you guys as traders to learn from my mistake, that resistance is resistance and support is support. And that's just the way it goes until resistance actually breaks or support actually breaks. Now, the way I like to see resistance being broken is generally on a 4-hour chart, a marketplace to go up through it, close above it, open above it. But this is the most important part that you have to look for. You have to actually watch the follow through, because I'm going to give you the example of this chart as when we came back down to the 154.80 level, how it used that support, that old resistance line that was basically here, the resistance here, as it pushed down, and then finally, like, look at this. It basically broke up. It closed a little bit below this price, opened a little bit below it, and then did the takeoff up into this 156.07 high. And now we're reconsolidating. Okay, so the true trade, as I think back as a moron, should have been really to sell the 155.80 level, not buy it. I mean, you should have sold it with a stop loss on an open above 156.08. Now, I'm a human being, and I basically formulated this idea, and went with it. And I'm not a bullshit artist, so I'm going to tell you the truth. It was a horrible trade. Really was a horrible trade. Yesterday, all day, you could not find a buyer in sight. I mean, the bears were completely in charge of this thing. So I'll tell you exactly how my trade went. That evening, I bought 3 pips off the high, or 4 pips off the high, 155.86. And the next day it came in, we were around 155.30. I said, shoot. Okay, so we didn't get up above the 156.08 level. So what to do? I mean, I could square out right now, take the 50 pip loss, and just move on from there. But the idea was that we could go down to 154.90. I thought 150, but truly that was wrong, because the real price was the old high, which I should have mentioned. That's where my analysis should have been, right around 154.83. So usually when I have something like this, I like to give the marketplace a little bit of what I call lost motion. You can use 10, 15 pips below that level, as long as it doesn't close and open below that. As long as we have, basically a pop back up through, we got a good chance of coming back up into the range and making money. So the original trade should have been to sell 155.80s and then turn the damn thing around 154.90. And guess what? I would have made 100 points on the way down, and almost like 70, 60 points on the way up or something like that. But that's not what happened. And if my grandmother had a pair of balls, I wouldn't be here. So when I came in and I saw that we were at the old low that held the day before, what did I go and do? Well, I went and bought some more at that low, watching very carefully, because I wasn't adding, I wasn't adding to a bad position. I was just trying to basically scalp, thinking I can get back up to 155.60. Never happened. It rallied up to like 43. I ended up selling them. I bought them at, I think, 32 on average. I ended up selling them at 38, 6 pips after brokerage. Really no gain. Okay, nothing to help that really bad buy at 155.86. So the original core position, I already planned for a stop loss of about 120 pips. I could have been able to afford that. It was only 3% of an account value. Nothing major, although I wouldn't have liked to give it up. Nobody likes to give up, give up profits or give up capital. That's for sure. So at the end of the day, I saw it creeping down to 150. It was 155 the figure. I bought it at 155 the figure, and it went up to 20, and I ended up selling 155 12s because it could not get up over 30. So again, I bought it. I think I bought them at 06. So I made 6 pips again after brokerage, no money. Again, not helping the 155.86 shit purchase. Okay. So at the end of the day, I saw this marketplace creep down right here. Matter of fact, it did one of those bogus opens where the bid was 79 and the ask was like 89 or something like that. One of those bogus things where the broker basically flushed everybody out that, put a stop loss at say 80 or something, So here's what I mean, or here's one of the examples of what I mean when the marketplace basically just rejects a price. Now, the real price was 83. I think I said around 90 or something. That I adjusted it because of this top. So the original was not right. And if I had a trading group, I would have alerted everybody, but I don't have a trading group right yet. So this was the original price where I wanted to buy the damn thing. If you listen to the video, and I was impatient. I was like, oh shoot, that 30 level, this level here, 155.30, that level like held. So I'm thinking, okay, we can't get down in this area because of impatience. And now I could have stuck to the guns and saying that I'm going to wait for the 155, 154.90 level. Now, a lot of times that doesn't come. But however, I also had a trigger at 156.08. So there was no point in me not waiting aside from impatience. And impatience could be the death knell for a trader. And look, I've been doing this for over 30 years and I still fell victim to it. So, but I caught myself. I said, damn, I'm being impatient. But I also had a position on that if I lost, it would have been, okay, shame on you. You didn't follow your rules. But, it wasn't going to devastate my trading account. And that's the most important thing. I believe Bruce Kovner said this. He said, whatever position size you think you ought to have, cut it in half. Because at that time, that was like, I'm going to front run this breakout, which may never occur. This thing could just basically crap out. Where it craps out is basically if we get an open, below, I have to go to a daily chart, but I think this is fine. You get an open below here, 153.15, this thing's crapped out, but that's a long way off right now. So sitting at 55.30, we're threatening. Now, so the last trade I did was basically I bought 154.86. I basically doubled up with a stop on an open below 154.70. Now the low went to 154.76. It didn't open. This is what I'm talking about, rejection. Marketplace came down. It opened slightly below that 90 level I was concerned with, but you see how it quickly rejected and came back up into the range. So the ones that I bought at 86, I sold at 37. Yeah, 37. That basically helped my average at the 155.86. That was good. That helped my average, brought the average down to like 40, 46 or something. And I ended up selling them at like 38. So I lost small loss, like $400 on that trade. So it was trade management, and I knew I had the potential to lose, what 3%. Okay. But I wasn't going to let the add-on trades really hurt me. I wasn't going to sit there and go, I'm not going to stand in front of a freight train. So where's the next points in this thing? Well, We need a break above 155.75, and we need an open above 155.75 on a 4-hour basis. If we get that, we're going to test like 156.20, 156.30. Now, it needs to stay above 150, 156. The '08 level is a very important level. If we can get through there, it's probably going to catapult really higher, because that, like I said, that was a historic high price back from 2018. And these prices are important, so this price could break out. If it does break out, the first stop, remember, as I was saying, on the 31st was 156.75. Now, I would think price action would be 156.70, 156.80, 156 like 14, protecting that '08, maybe even coming down to '08, touching it, going through it, back up through it, and then eventually moving forward. If this marketplace now on a 4-hour basis closes below and opens below 154.70, well, we're going to go back down to the range again, 153, 154 the figure, 153.90 again, really resetting sterling yen for either an upward push again, maybe a slightly lower high and then down. Or now, I'm not speaking out of both sides of my mouth here. I'm just giving scenarios, but how I like to look at markets. Or we can get consolidation again at this 154.80, and then the push up and above 75 to get us up into here, 156.30, 156.40, and then we have to see how it reacts up there. So here's the new trade plan that I'm sticking to. I'm going to wait to see how this marketplace reacts at this 30. That was a couple hours left, 3 hours left to the New York market. I expect to be kind of quiet, but I would like, if it can get above 155.75, I would be interested in trying to look to scoop it somewhere. I'm not going to just buy the high, Okay, so if 75 is important, really the price is 155.66. It's a number I came up with that I calculated, but I need an open above that, and then we can see what happens at 156.08. So that was the update. I wanted to give it to you guys. I wanted to give it to you straight. I did lose money on the trade. I told you how I handled the trade, and let's try not to do that again. All right. Well, I look forward to seeing you soon again. Cheers.